So if this tax plan passes, the IRS says we could start noticing a difference in our paychecks as soon as February, that early. One of our local professionals here, somebody we call on from time to time, our certified estate planner from the Lloyd Group, Mark Lloyd, is joining us with some 5 smart money moves that we can make or should make before the year is out. So charitable contributions?
Absolutely.
Is that on the list?
Because of those deductions going up, standardized deductions going up, it may be that you're on the cusp of being able to file this year and still itemize. So you want to take advantage of charitable donations because next year it might be a better deal for you to take standard deduction. And it's all about putting more money in your pocket. So yeah, take it early, but make sure a couple things that you itemize or you put down the check gets credited by the end of the year. If you're paying by a credit card, keep all your documentation for 2017.
So if you write a check on, let's say, December 31st, it may not necessarily count
make sure that
the
organization you're sending it to credits it on time for you, and keep your documentation because the 2017 tax returns will be under the old rules.
All right. Is it safe to say that no deductions for 2018 if this tax bill goes through?
No, there'll still be like high income earners are still going to itemize. There's going to be some changes in what they can write off, and that's some of the things we're going to talk about right now with the 5 smart money moves.
Okay, so tell us the rest of them.
Okay, well, we've got paying your mortgage early. Again, because of that standard deduction, we can write off mortgage interest, right? So if you're itemizing and you're used to writing off your interest, it may not be, next year you might not be able to do that because your standard deduction is higher. So if it makes more sense, you don't write your mortgage off, you just get more tax money back because of that.
Is that really for those states in the Northeast, though? Does that affect us here in Georgia? We can still write off our mortgage interest, right?
We can, but they are capping it out at $750,000 for new mortgages next year, where it used to be $1 million. So that's one of where the high income tax earners might take a hit. Also on property taxes. Property taxes now are counted in with your state income tax, and that was one of the debates. Would we be able to take our state income tax and file it against the federal tax form? And they've capped that out at $10,000 between property tax and state income tax and sales tax.
Perhaps pay that early this year.
Yes, exactly.
All right, and deferring income.
Yeah, deferring income. So let's say you're a small business owner. Maybe it makes sense to bill out the first week of January because all those brackets are going down next year. The tax rates are going down. So you want to make more money. So if you bill out next year, it goes against next year's tax rates. Where maybe you work for a company that gives you an end of the year bonus. Wouldn't hurt to ask, can I have my bonus the first week of January instead, because the tax rates will be lower and more money into your pocket.
Gotcha. All right, and consult a professional, right? That's what we're doing with you today.
It's so complex that if you're a do-it-yourselfer, maybe this next year is the best year to use a CPA or a tax preparer so that you can take advantage of every write-off you're entitled to. That's what it's all about.
All right, thank you so much, Mark Lloyd from the Lloyd Group. Appreciate your time.